Macroeconomist and CEO of Real Vision, Raoul Pal is well known in the investment world for his perceptive assessments of global macroeconomic trends and his capacity to spot new trading opportunities. Raoul has been forecasting a price explosion in the coming months and has recently become more optimistic about cryptocurrencies and risky investments. The extraordinary fiscal and monetary stimulus being pumped into the global economy is one of the main reasons behind Raoul's optimistic view. To combat the COVID-19 pandemic's economic effects, governments all over the world have put in place sizable stimulus plans, which have resulted in record high levels of public debt and central bank balance sheets. Raoul asserts that this stimulus has produced an environment of excessive liquidity that will probably cause the price of risky assets like cryptocurrencies to increase. Investors are likely to flock to riskier investments in pursuit of bigger returns as they seek income in an environment with low interest rates. Raoul also thinks that because of their scarcity and deflationary character, cryptocurrencies like Bitcoin are especially well positioned to profit from this climate. The limited quantity of Bitcoin and other cryptocurrencies makes them an appealing alternative to traditional currencies, particularly as worries about currency devaluation and inflation continue to mount. Governments around the world continue to print trillions of dollars to support their economies. Raoul is bullish on the macroeconomic and technical outlooks for cryptocurrencies in addition to the macroeconomic variables that are motivating him. His examination of price charts and technical indicators revealed that numerous cryptocurrencies, including Bitcoin, had reached a crucial support level and were about to make a significant breakout. Raoul also thinks that the recent regulatory constraints on cryptocurrencies would benefit the industry in the long run, since they would increase regulatory clarity and legitimacy for the market for digital assets. Market stability and institutional investor appeal are anticipated to increase as regulatory frameworks governing cryptocurrencies continue to change. However, it is crucial to highlight that there are considerable dangers associated with investing in cryptocurrencies and other risky assets, and investors should be aware of the likelihood of price volatility and market swings. Investors should exercise caution when dealing with these assets and make sure their investing strategy is diversified and incorporates a variety of asset classes. Raoul Pal, CEO of Real Vision and a macroeconomist, recently gave an interview in which he shared his opinions on the present banking crisis and its probable effects on inflation and deflation. Raoul predicts that the banking crisis and the growing use of artificial intelligence, AI, will result in lowering inflation and perhaps even deflation. The rising automation of the workforce through the use of AI and other technologies is one of the main factors driving this trend. The demand for labor is anticipated to decline as more employment are mechanized and replaced by machines, which will result in lower wages and costs. Furthermore, the banking crisis is probably going to make this tendency worse by slowing down lending and credit expansion, which is probably going to result in less economic activity and lower prices. This might trigger a cycle of declining prices and less economic growth, which would eventually lead to deflation. Raoul predicts that this pattern will lead central banks all around the world to lower interest rates in an effort to boost economic development and avoid deflation. Although, while interest rate reductions have the potential to increase inflation in the long run, they are likely to be seen as a necessary precaution to stop a deflationary cycle. Raoul's prognosis is quite positive from an investment standpoint because reduced interest rates will probably increase the value of risky assets like stocks and cryptocurrencies. Also, a rush to safe haven assets like gold and bonds could result from the possibility of deflation, which would be advantageous for investors. It is crucial to remember that Raoul's predictions are predicated on a number of misconceptions regarding the state of the world economy and the effects of AI on the labor market. Although these patterns may be developing, it is still quite unclear how they will ultimately affect inflation and deflation. In addition, it's crucial for investors to approach these trends cautiously and to have a diversified investing strategy that incorporates a variety of asset types. Stocks and cryptocurrencies are both high-risk investments, and investors should be ready for the possibility of market volatility and fluctuation. Macroeconomist and CEO of Real Vision, Raoul Pal, is renowned for his astute understanding of the world economy and financial markets. According to Raoul, there is currently a great possibility for outsized gains because risk assets and markets are directly related to the monetary cycle. The extraordinary amounts of fiscal and monetary stimulus being poured into the world economy are one of the main causes of this trend. To combat the COVID-19 pandemic's economic effects, governments all over the world have put in place sizable stimulus plans, which have resulted in record high levels of public debt and central bank balance sheets. Raoul claims that because of the stimulus, there is an atmosphere where there is an excess of liquidity, which is pushing up the cost of risky assets like stocks, cryptocurrencies, and commodities. Investors are increasingly flocking to these risky assets in quest of greater returns as they seek yield in a climate of low interest rates. Furthermore, Raoul thinks that this pattern will probably persist in the upcoming months as governments and central banks continue to provide economic stimulation. Although there may be some short-term market volatility and changes, the overall trend is probably bullish for risk assets, and investors who are willing to accept the accompanying risks could perhaps benefit greatly. But it's crucial to remember that investing in risky assets entails a number of dangers, and investors should be ready for the likelihood of market volatility and changes. Investors should also exercise caution when dealing with these assets and make sure their investing strategy is diversified and incorporates a variety of asset classes. Raoul thinks that from an investment standpoint, there are a number of industries and asset classes that are especially well positioned to profit from the present monetary cycle. For instance, he has a strong positive outlook on cryptocurrencies like Bitcoin, which he predicts will have a significant breakthrough in the upcoming months. The distinctive characteristics of cryptocurrencies and other digital assets, such as their scarcity and deflationary nature, are the foundation of Raoul Pal's bullish stance on them. Investor confidence in these assets is also being boosted by the increased institutional usage of cryptocurrencies and the legal clarity around the market for digital assets. Furthermore, as worries about currency devaluation and inflation continue to rise, the record amounts of fiscal and monetary stimulus being poured into the global economy are likely to increase demand for alternative assets like cryptocurrencies. Raoul believes that the recent price declines in the cryptocurrency market are a positive development and will probably pave the way for a significant rally in the months to come. Additionally, he thinks that cryptocurrencies are a desirable replacement for traditional currencies, especially as worries about currency depreciation and inflation continue to rise due to their restricted supply and deflationary character. Raoul is bullish on commodities like gold and silver in addition to cryptocurrencies because he thinks they will profit from the current monetary cycle. Concerns about currency depreciation and inflation are anticipated to increase as central banks continue to inject stimulus into the economy, which might increase demand for safe haven assets like gold and silver. Raoul also thinks that the present monetary cycle will be particularly advantageous for emerging markets. Investors are likely to resort to emerging market equities and debt, which provide higher returns than their developed market counterparts, as they look for income in a low interest rate environment. Investors can get important knowledge about the possible benefits and risks of investing in cryptocurrencies and other digital assets from Raoul Pal's bullish stance on these assets. As always, investors should exercise caution when dealing with these assets and make sure they have a diversified investing plan that incorporates a variety of asset classes. Yet, given their restricted availability, deflationary characteristics, and rising institutional use, cryptocurrencies may present a compelling alternative to conventional currencies in the near future. Make sure to like and subscribe for other industry insights from professionals like Raoul Pal.